So in the overnight session, the market consolidated within a range and we saw a minor pullback. And then this morning we had the CPI number out at 7:30 a.m. Central Time. And following the CPI number, we've seen a spike up into a fresh all-time high. Now heading into the open, technically bullish time frame alignment is in effect, but at the same time, the market is also getting quite overextended to the upside, and it's questionable as to how much higher the market can push without some consolidation and balancing. So even though bullish time frame alignment is technically in effect, we also have to be mindful of just how big of a move the market has already made and how much more fuel is left in the tank. Now the reality is that ES is making fresh all-time highs, so it's anyone's guess as to how much higher it can go, but I think it's safe to say that the market is starting to get exhausted and a bit tired to the upside, and for that reason, even though technically bullish time frame alignment is in effect, I think we need to be cautious even on the long side. So that could mean waiting for good trade location or playing much more defense on any longs that do trigger today. On the downside, we have the most aggressive area of support at 56.8575 to 94.75. Holding above that zone would be a sign of continued strength, while a breakdown below it would be an early warning sign, which can then result in a move down into the initial support at 56.70.75 to 79.75, where buyers may be active on first test. But as far as trade location goes, even initial support is relatively aggressive trade location. So I think we should be defensive even at initial support today. And a breakdown below initial support would serve as an intraday bearish indication, and that can then result in a test of the 56.52 to 62 area, which is a more significant area of support, and buyers are likely to be active there on first test. That marks yesterday's intraday balance breakout area, so the expectation would be for buyers to defend there on first test. And if you want to play defense, even at 56.52 to 62, then you could put your stop behind the 56.49 support level. So for example, if the market is breaking lower into 56.52 to 62 on some pretty decent downside tick readings, and that means that you're fading big momentum, then it'll be safer to put your stop behind 56.49, and a breakdown below 56.52 and 56.49 would really put yesterday's breakout into question. So that would be yet another bearish indication. And then below that, we have yesterday's RTH low at 56.37.44.5. And again, buyers are likely to be active there on first test. And a break and hold below that area would serve as an intraday bearish confirmation. And the same goes for the 56.24 quarter to 32.75 zone. Now, in order for the bearish scenario on the day time frame to trigger, we would need to see a breakdown below the aggressive and initial support zone.